there's an important mindset shift that has to happen where at a certain point where you have to start thinking in terms of not only growth, but in terms of preservation of capital, because you are not going to be able to do all of the things that you are currently doing forever. And I don't believe in the term retire, right? I believe in the term redeploy, right? My friend Wayne Johnson, who's been on the show a couple of times, he talks about don't retire, just redeploy. You can end one season of your life, but you always need to be working towards having some sense of accomplishment and purpose beyond just living in a condo in Florida and collecting seashells, right? It's like you need to be in a growth mindset. Hey, everybody, welcome back to another episode of Own the Exit. I am your host, Caleb Edwards. I'm here in the studio alone today. Aaron is out of town. He'll be back for our next series of episodes, so you're stuck with me today. I promise it's going to be a good one, though. I want to talk today on the subject of how to transition from being an entrepreneur to being an entrepreneur investor. And what I mean by entrepreneur investor, somebody who's staying laser focused in their lane, building their baby, but at the same time understands that at some point in their journey, it's important to begin to harvest from the crop that you've been digging, tilling, planting, right? You got to start to harvest and get that planted in another field somewhere. That's how you grow exponentially, right? And what that means is taking the success that you're having as an entrepreneur and business owner and diversifying that success into things that take less of your time, less of your energy, less of your focus, so that you can continue to be laser focused on your business and owning your exit in your business, but you're also building significant exponential wealth in a way that condenses time for you and buys financial freedom over the long run. And so why is this particular subject really important for me? It's actually a pretty intense reason, to be honest with you. I've been an entrepreneur my entire life. I started my first company when I was 11 years old. It was a landscaping business. I started it to help my mom, who was struggling financially, had to go get a job at a Cracker Barrel as a server. I saw her struggling and I wanted to help. And so I repaired a push lawnmower, started a landscaping company. And I didn't know that I would continue to run and operate that landscaping company and grow that business and scale that business until I was 26 years old when I sold it. And so I learned a lot along the way in that. When I sold my business, I spent 10 years almost exclusively in the nonprofit space, in missions work and things like that. But I was always building different businesses on the side. But everything that I did, I tell people you can take the boy out of business, but you can't take the business out of the boy. And so I've never been able to get away from being an entrepreneur, even when I was focusing more in the nonprofit kind of purpose-driven space. I was always building businesses, always finding ways to scratch that entrepreneurial itch, but every single thing that I did was always very active, very hands-on, from building the landscaping business to building a telecom resales company that did quite well, to a couple of different failed ventures in the health and wellness space, all the way to swing trading my personal portfolio in the stock market and seeing tremendous success in that. Every single thing that I did required my constant attention and active involvement, even managing my investments, right? Swing trading. And a few years ago, my 9-month-old son at the time suffered an ultra rare pediatric stroke in the left side of his brain. And that rendered the whole right side of his body completely paralyzed and took me out for about 4.5 months. Mentally, emotionally, had to go all in on my son and my family. And in that 4.5 months, lost 40% of my net worth because I couldn't keep my hands on the wheel of everything that I was trying to manage. And I realized at that time, once the dust settled, my son is a full-blown miracle. He made a miraculous recovery despite what his medical team said. And so the dust settled. I was able to come out of that, but I realized I got to find a better, smarter path forward. I can't just be building wealth through my own active, laser-focused involvement, right? I've got to begin to plant seeds, plant trees, so that 5 years, 10 years, 15 years down the road from now, I actually have my money working for me, not just working for my money. And that's why that's really important to me to talk to other entrepreneurs like me, because maybe you haven't felt or experienced kind of a crisis situation like what I went through. But I want you and your family to be secure and settled and not have to face what I faced. And I think one of the best things that you can do is learn from other people's failure and hard lessons so that you don't have to learn those hard lessons by experiencing them yourself. So that's why this is really important to me. It's why I wanted to do this episode. And so I want to start with talking about this kind of dilemma and the difficulty. And I did an episode on this in the past, but I want to start the episode by talking about this because the rich dad, poor dad cash flow or wealth quadrant, it's the most difficult transition, I think, for any entrepreneur is to go from being the business owner to being the investor. And the investor is the ultimate goal. Rich Dad, Poor Dad, the book that got all of us, almost all of us, started on this journey, he teaches that where you want to end up is in that investor quadrant because that's the only place where financial freedom is actually achieved, right? And so just to recap what the 4 quadrants are. Number 1 is an employee, right? That means that you have a job. Number 2, the second quadrant, is self-employed. That's for you solopreneur guys out there, right? You don't have a job, but you still own a job. You're still trading time for money, right? If you don't show up, you don't make money. You get to be your own boss, but you're still trading time for money. Then a kind of a level up from that is going from being self-employed to being a business owner because you don't have a job or own a job. You own a system or a machine, right? And that still requires active involvement, attention, and time. So yes, you're trading time for money, but you're leveraging that time by using that time to build a system that generates income for you and your family, right? And that's where most of you listening to this podcast probably are. You're either self-employed with business owner aspirations, or you currently are a business owner, or maybe you're employed and you're wanting to build a business, but many struggle from getting to from that business owner quadrant into the investor quadrant. And the investor quadrant, that's where your money is actually working for you. Now, when you're a business owner, you start out, I think it's wise actually to invest mostly back into the growth and success of your company. There's no other method or manner to financial success and financial freedom. There's no better way than building a business, than becoming a business owner. That's not the end of the journey to financial freedom. That's just the fastest path to financial freedom, right? And so reinvesting back into your business is tremendously important, especially early on, especially when you're in a high growth trajectory. Pouring back into your business is absolutely critical. So that's a good habit to have at a certain moment in time, right? But it's important to be able to identify when does it grow to a point where now I need to start shaving off some of the cash flow from my business and allocating it somewhere else rather than just pouring everything back into the business. Right? And I think that starts with a shift in mindset. When you're early on in your journey, you're focused on growth, right? I just want to grow. I just want to get more. I just want this thing to get big and awesome and make lots of money and help a lot of other people make lots of money in the business, right? But there's an important mindset shift that has to happen where at a certain point you reach a certain age in your entrepreneurial journey, if you will, where you have to start thinking in terms of not only growth, but in terms of preservation of capital, because you are not going to be able to do all of the things that you are currently doing forever. And I don't believe in the term retire, right? I believe in the term redeploy. Right? My friend Wayne Johnson, who's been on the show a couple of times, he talks about don't retire, just redeploy. You can end one season of your life, but you always need to be working towards having some sense of accomplishment and purpose beyond just living in a condo in Florida and collecting seashells. You need to be in a growth mindset. It's going to help you stay sharp. It's going to help you continue to live a long, more fulfilling life. But you do need to consider that you're not always going to be able to do things the way that you're doing them right now. You have to have that realization. And for me, that realization came way earlier than I expected it when everything happened with my son. I realized, wow, life is pretty fragile. It's a lot more fragile. My business, my income, my ability to go out there and create and build and grow wealth, it's actually a lot more fragile than I thought it was, because I'm only focused just on growth and not thinking about how can I take some of this growth, harvest it, and reinvest it into the future to create a preservation of capital and wealth, right? And so that is why Robert Kiyosaki talks about, in order to achieve true financial freedom, you have to be able to move from just being a business owner to being an investor, right? And this is what we've seen with Warren Buffett, with Charlie Munger, with Ray Dalio, with some of the most successful investors of all time, is they all have experience in owning businesses. They've been able to take their knowledge and experience of that and learn how to redeploy that knowledge into things that other people are building and growing. And that whole process is called investing, because money follows knowledge. What you are knowledgeable of, that's where your money is going to go. And if you have knowledge in a certain area and you build a business around that knowledge, then money's going to be attracted to that. When you redeploy that money into something else, it should be redeployed into something that you're able to understand. And so I think that's the next point. It's not only knowing when to shift your mindset from growth to preservation, it's also understanding the power of not putting yourself in a box in what you invest in, right? There's lots of investment vehicles. There's lots of opportunities to invest, right? There's stocks, there's bonds, there's real estate, there's cryptocurrency, there's gold and commodities and futures and options, and lots of options of how to invest. But I want to tell you why I personally, as an entrepreneur with a robust entrepreneurial background, done a lot of stuff, had a lot of success, had a lot of failure, why I've landed on real estate as being one of the primary vehicles that I personally invest in. Appreciation and stable cash flow potential. It's something that we want in our business. It's also something that we want in real estate, right? It's a stable asset class because it's illiquid, which means it's not as subject to volatility. And here's the big, more important thing that I'm pointing out because of you being an entrepreneur listening to this. Performance and returns are not able to be as easily manipulated up and down by larger players in the market. The actual performance is more closely tied to the actual performance of the asset and not perceived value. Let me break that down because that could be a little complicated. I heard Alex Hormozi on a podcast with Dave Ramsey, right? And Alex actually told Dave on the show, he said, you have had a tremendous impact on how I have chosen to start and launch acquisitions.com. And here's why. When Alex went on to explain, when he had achieved his exit from Gem Launch, $100 million exit, he suddenly has this huge influx of capital. And when you've got a huge influx of capital from achieving exit, I promise you, investment opportunities will come out of the woodwork and find you. And Alex experienced that. And so he's got this $100 million, right, of capital, and he's crippled because he doesn't know what to invest in. I've only ever built a business. I don't know anything about investing. And he was listening to an episode of Dave Ramsey where he was talking to some investment advisor guy, somebody who manages large portfolios. And the guy said, the way I think about it, if I was to advise anyone on the very best investment strategy, because that was the question, what's the best investment strategy? If I was to advise anyone on the best investment strategy, it's to think about it this way. It's open your portfolio and put it in front of you, and then open your mind and see what knowledge, experience, all of that do you have in your mind? What understanding do you have? And look and see, does my portfolio match my knowledge? Does my portfolio match my knowledge? Am I investing in things that I understand? Warren Buffett's famous for saying, don't invest in anything that you can't understand or that you don't understand, right? And obviously, Warren Buffett is pretty successful at investing, wouldn't you say? Alex Hormozi in that interview with Dave said, when that guy made that statement on your show, Dave, everything clicked for me. And I suddenly realized I need to invest in businesses. I need to invest in companies and private equity because that's what I understand and know. And that was literally the straw that broke the camel's back that helped Alex go and launch acquisitions.com, which now manages a portfolio of businesses that's probably approaching $1 billion worth of companies. And the reason that I think, though, that real estate is a sensible investment for any entrepreneur and business owner is this, because business owners and entrepreneurs have a unfair advantage when it comes to investing in passive real estate. And here's why I say that. When you own and operate a business, you've really got 3 primary things that you need to accomplish and do well in that business in order for that business to be successful. Now, in those 3 categories, there's lots of complex moving parts depending on what industry you're in, but break it down to 3 things. The 3 primary things you have to focus on as a business owner to be successful are, number 1 is revenue. How are we going to get money in the door, right? Number 2 is expenses, right? How much is it going to cost to run and operate this business and deliver whatever product or service that we offer? And number 3 is, who are the right people to implement the plans for number 1 and number 2, right? Those are the 3 things you've got to do. It's revenue, expense management, and people. So maybe you're looking at, how can I increase revenue while decreasing expenses? And how can I get the right people in place to execute the plan to increase revenue and decrease expenses? If you're able to do those 3 really well, then you'll have tremendous success, right? The reason I think real estate is a great investment for entrepreneurs who understand that's the big 3 is because it's the same in real estate investing, but so much more simple. It doesn't have as much of that underlying complexity to it, right? When you look at investing in an apartment building, like what we invest in at Oak IQ Investments, our firm, when you invest in an apartment building, there are 3 things that you need to get right. Number 1 is, what is our revenue and what's the plan to increase it? Number 2 is, what are our expenses to manage this asset? And what is our plan to decrease those expenses? And number 3, who are the right people to run the play? And if we get those 3, then we're going to be successful. And with real estate investments, even multifamily, larger assets, multi-million-dollar assets, right now, we're building a $70 million apartment complex in the Kansas City metro area. And the only things that we need to get right over the long-term hold of this asset is those 3 things. Now, with real estate, being able to decrease your expenses while increasing revenue is a much more simple process, because how do you increase revenue? There's only 1, maybe 2, maybe 3 revenue streams on a large asset like this. There's your primary revenue stream are your tenants paying rent. Then maybe you've got some paid amenities like covered parking or something like that. And then maybe you've got some kind of, membership to the fitness center, some little store in the clubhouse where people can buy basic things that they need. There's not hundreds of revenue streams or even dozens of revenue streams. There's like a couple revenue streams. And so in order to optimize and increase those revenue streams, it's pretty easy. What can we do to improve the quality of the asset so that we can increase rent? That will increase our revenue. And it's pretty easily predictable, right? And then there's lowering expenses. Ultimately, the expenses are, you break it into controllable expenses and uncontrollable expenses, right? And so there's taxes and insurance. Someone else determines that, right? We can't control that, so we just project that out. But then there's things like on-site management and maintenance payroll and different things like that we can have some control over. How do we make that more efficient, right? And then who are the right people to run the play? And so that's why I think entrepreneurs who become entrepreneur investors thrive in passive real estate investing, because they understand the fundamentals of how a deal like that can be successful. And if they just ask questions and due diligence with whatever operator they're looking to invest with, the same kind of questions that they would ask about their own company, right? That they would ask their CFO, hey, what's our revenue? Basic questions. What's our overall quarterly revenue? What are we going to do to increase that, things like that. Just ask the same questions. They'll get the answers that they're looking for in vetting the deal and knowing what deals are poised for success and what deals are not. And it's really easy to take then that Dave Ramsey, Alex Hormozi example that I gave earlier and say, this is how I take the knowledge that's in my head and I project it onto my investment portfolio. Is I understand how businesses operate, and real estate assets and investments operate the same way that businesses do, but in a lot cleaner and more simple set of line items. And ultimately, I really believe that going from making that transition from being an entrepreneur to an entrepreneur investor, it really is about knowing when to focus solely on growth and when to start shaving and harvesting some of your cash flow and being able to pour it into other things so that you can preserve some of that capital and help it grow passively as you continue to stay laser focused. And then I also really believe that if you are going to be long-term successful, then investing in something that you're able to easily understand is going to be absolutely critical for you. And I personally think if you're an entrepreneur who's built a successful business, then investing in real estate is the simplest and easiest way for you to invest because it fits within your existing skill set and knowledge base. And then being able to do that passively allows you to spend more time, effort, energy, and attention focusing on your family and on your business and on doing the things that you actually want to do rather than just building another side hustle that steals more of your time. There's a lot more that we're going to talk about on future episodes about becoming an entrepreneur investor as a critical strategy and owning your exit. But that's all I got for you today. Thank you so much for joining us for this episode of Own the Exit. If this episode's got you thinking more about your own financial future, then here's what I want you to do. I want you to take 15 minutes this week to list out all of your current investments, including your business. Then I want you to ask yourself, am I too heavily invested into my business for this stage of the journey, right? Then I want you to share some of your insights and your questions in the comments below or on social media using the hashtag #EntrepreneurInvestor. And then if you're looking to dive deeper into smart investment strategies for entrepreneurs, go ahead and hit the subscribe button. Join our community of forward-thinking business owners. And remember, the best time to start thinking like an investor was yesterday. The second best time is now. Until next time, keep growing, keep learning, and start investing. Thanks for listening to On the Exit.